Hi, my name is Richard Evans. I am a hotel consultant specializing in condo hotels. Been in the business for 25 years, in the condo hotel business for 14 years. Today I'd like to discuss the metrics of a condo hotel with you. And up on the screen you can see metrics for specifically a condo hotel, a luxury resort that is 165 units in the South Atlantic area. And what I've done is I've used a resource called the Host Report put out by Smith Travel. And what I've done is I've taken the metrics of a traditional hotel and I've created adjustments so that we can see what a condo hotel of the same size should be achieving. First, I'd like to say that a condo hotel and a traditional hotel, 4 diamond caliber in this particular example, up until what we call the gross operating profit, operates almost identically. Okay, so here we can see that in 2011, the occupancy for this type of hotel in this region averaged out to be 68.2%. We've plugged in the size of the property to be 165 rooms, and the daily average rate, or the ADR, the average daily rate for 2011 for the full year was $169. Okay, and you can see that here. Okay, therefore the revenue in the rooms division from those numbers would be $6,954,805. And that would be both in the traditional hotel and the condo hotel. From that number, we've used our metrics to describe what the average or typical hotel in this segment would earn in food and beverage, the telephone department, and other income. And you can see those right here. Okay, so a 165 unit hotel in this area would typically gross $11,364,000. From that, we use percentages derived from those given to us, and we can see what the profitability in each of the divisions is, and the profit on $11,364,000 would be $6,839,141. Once again, identical from the traditional hotel to the condo hotel. Then we get into undistributed operating expenses. Administrative in general would be at $1,020,000, again identical, and the sales and marketing would typically be about $806,000. Here's where we start to differentiate between the two type of hotel structures. Utility cost in the traditional hotel would be $477,291. Now, the reason that this is much higher is because utility costs in the condo hotel usually are absorbed by the unit owners, and the unit owners pay for that utility cost through their maintenance payments every month. What we see on this profit and loss statement, or this metric statement, the $71,594 represents utility costs derived from either sub-metering, might be into a laundry department, executive offices, front desk offices, and so on and so forth, a maintenance department, or sometimes an allocation is taken from the condo or the association. In this case, or in cases I'm familiar with, 15% is the usual number. Also, in the property operations and maintenance, we can see a vast difference of $473,000 from how the traditional hotel operates to the condo hotel. And that's because inside the rooms, all repair and maintenance expenses are absorbed by the unit owners. And what would typically happen is an owner coordinator, when there is a problem or something that needs to be replaced or refurbished in a room, would call the unit owner, provide them with a price. Normally that price would be much lower than they could achieve on their own in the market from a third party. And the owner would pay for those costs. So you can see, as we arrive at the gross operating profit, you can see already there is a differential of $879,000 and $879.11 in this particular example. To that, we would apply the management fees. Typically, they can run anywhere from 3 to 5%. I usually use 4% as an average. In this case, $440,926 in both structures. And then the reserve for replacement this would be interiors of the condos. This is not a reserve for the building, and that could run anywhere from 3 to 4% typically of gross room revenues. So you can see that that's $250,000. And now what we have now is we have a differential of $879,000 from the traditional to the condo hotel in savings. And you can see that the condo hotel has a higher profit to this point of $4,165,746. Now here's where we get into the differences between the condo hotel and the traditional hotel. First off, property taxes. Okay, the condo hotel is only paying property taxes on the commercial units that they own. I've mentioned them before. They typically would be closets on floors that are used for storage, a housekeeping department usually located in the basement, a maintenance department, executive offices, and so forth. So those property taxes are $526,839 on average, lower than the traditional hotel. Likewise, insurance expense is $95,459 on average, lower. And why is that? It's because the unit owner would have renter's insurance to protect themselves against liability. This is imperative and something that I'll speak about in a future blog. But anything that happens in the unit, unless it has to do with negligence on the hotel staff part, would be absorbed by the unit owner's insurance policy. So then you can see a big savings there. We'll skip down then to the distributions, which is a very big area and line item expense. And this is the amounts paid to the unit owners on a monthly basis. And it's a percentage of what gross revenues are brought into the building. In this case, because I backed into the figure, I'm using a 42% because I know a lot more about this particular entity. So I've used the 42% amount of money, and you can say that $2,921,018 would be paid out to unit owners through the course of the year on the gross room revenues. Now, in this particular case, I'm using an example where the association has purchased the hotel program, and it's something that I'm talking about in my blog if you read the same. And in this case, aside from the 4% paid to the management fee, the management company or the operating company would only receive additional revenues if they earn profit. And once again, that is something that can be negotiated. In this particular case, we said that if the operator / management company could earn net income, they would receive 15% of that net income, and they would share an additional payment with the owners. So a 13th dynamic payment, which would equal 85% of the entire net operating income, would then be distributed on a pro rata share to the owners that are participating in the rental program. And that's the distribution. The 15% that I spoke about would then go to the operator. It would really, both would be provided to each simultaneously, and the operator's bonus for earning that income this year would be $150,000. And finally, the other line that differentiates the traditional hotel to the condo hotel is that the condo hotel owner's program or hotel program is paying hotel program condo maintenance on a monthly basis, just like everyone else is in the building, but they're paying on a commercial unit, which is always much, much less than regular units. And in this case, the average would be 85,000. So you can see that we have a differential here of 3,105,528. Okay, the profit therefore on a condo hotel, after the owners in the hotel pool receive the additional 850,000 of profit, and after the hotel operator receives the bonus of $150,000, would be $88,818. Should there be no more expenses other than those, that $88,000 profit would then actually be paid from the condo hotel program with a check to the association, and it would be used in the association's next year budget to reduce the monthly maintenance costs. And to take it a step further and to describe the traditional hotel to you, the traditional hotel would be bringing $2,315,000 down to the bottom line, and that would be available to pay mortgages, which on a traditional hotel would be very high, any other debt service they have. So that's a good explanation of the metrics of a condo hotel and a traditional hotel that falls in the category discussed earlier, and that is for a luxury resort that is 165 units in the South Atlantic area. Thank you.